Okay. All right. So here we are on Sunday night. This is episode 13 of our sneak peek for the week coming out of Invest to Live. And I'm Sean, your host. As always, if you're not subscribed, we really appreciate it if you did so and throw us a like. It helps us get word out about our channel and grow a little bit. And frankly, any advice you have right back, we'd love to get that as well. We've got a few things to talk about tonight. I'm going to start first by saying, as always, this is entertainment and education only. Never, ever are we providing financial advice. We are not your financial advisors. Do not know your cash flow situation. And as such, you should always be seeking professional guidance that front. So let me start here. First of all, happy Father's Day to all the dads out there. They come in many different shapes and sizes. And if you see yourself as a dad, then happy Father's Day to you. I know today was a super busy day for me from coaching baseball and just spending time with the kiddos. It was a great day, and it's a good day for reflection. And I always think it's similar to a lot of things in life that it provides a lot of perspective about what you're working on, why you're working on things, how you look at sort of the things you're doing in life. And, it's just a good day. And I had a great day personally. So, I want to just say to both my kids, thank you for your nice gifts. And I want to throw thank you to my wife, Michelle, for obviously helping me be a dad. So it was a great day overall. And really happy to be here tonight. So I'm gonna pop right in. There's a couple of things really in my mind. It's sort of a varied amount of topics tonight, more so than really usual. So I'm gonna pop right in. First and foremost is for those who are into the crypto space. We had a pretty major event take place, and I think it really bears bringing up here that we had what we call the death cross take place in Bitcoin. The death cross is when the moving averages, typically the 200 and the 50-day moving averages, cross over and we get more of a bearish trend or a downward trend. The reason we call it death cross is because we can see a lot of shorter term moving averages, a 25 and a 50, a 10 and a 30. They can cross over at different times. It's not indicative of a really big move necessarily. The reason why we look at sort of this longer term death cross as being more significant is because it has happened in the past and the results have not been great. Just to give you some quick example of what this looks like, overall, as it's really typically charted, I think we've seen 6 death crosses happen over the time period that we've been tracking this within Bitcoin. 4 of these times have led to significant drops in price to the downward side. The ones that didn't, so the remaining 2, what we really saw was that they were coming at the end of a bear market, not sort of at the end of such a big, strong cycle like we've been in. So what I would say is take this with caution. It doesn't necessarily mean that anything is or is not going to happen. So it's always important to remember that historical views or historical charting is not always indicative of what is going to happen, frankly. But the reason this is important is a death cross is a real event. A 50 passing over a 200 to the negative side is a significant event, and you should be prepared for what that could mean. Now, for those who are looking at short-term holdings, this might be a time to think about whether you're looking to get in or out or what you think is going to happen in the future. So if this is an indicator you're using, just be aware of it. If you're a long-term holder and you're hodling, maybe this is an opportunity to buy more at a lower price. I'm a long-term holder here of crypto in general. So for me, it's just another year, having got in many years ago. So it's sort of just par for the course. I expect it to go up. I expect it to go down. And I think that general attitude or approach for me works really well. It doesn't cause me to have, agita and stress around the pricing. I just look as long-term as possible. So just an important note there as well. A couple other topics I want to cover tonight. We know that the continued crackdown on mining within the cryptocurrency space is still active and ongoing in China. We're seeing some hash rate declines. We are definitely seeing more and more stories coming out about the fact that this is happening. It's starting to spread to different provinces within China. What I will say that's sort of interesting, though, is I still keep thinking to myself, is this going to further push miners outside of China to look at cleaner sources of energy? Is this going to cause less concerns over China centralizing Bitcoin on their own soil? And it's possible that all those things could happen. But again, like we always talk about, I think the key is really going to be, does this cause long-term issues in mining? Does this create opportunities in mining? Who stands to benefit from this if this is the case? So, as I think about this, we see a number of publicly traded mining companies, Marathon, Hut. I'm trying to think of who just went public the other day. I can't recall now, but another one just went public as well, or is about to. And I suppose what I'm trying to understand is, knowing that we're seeing declines in Bitcoin pricing, we know that the death cross is in effect. We know that we are, or potentially could be, at the end of a bull run. Maybe it's the wrong time to think about it, but it might be the right time to start researching which of these players could really reasonably see some large advantage to China closing their mining. So just things to think about as we're going into the week here, and a good time to do research on those as well. What I think is also interesting is who would get benefit from from this beyond the obvious. We know that as these miners in China are being shut down, they're going to most likely need to move somewhere else. So we're seeing a lot of courting going on. We know Miami in the United States is looking to bring miners to their location. Frankly, I think we see a lot of Central American and South American countries as well looking to get people to come there and do the work. So I think that there's some reasonable expectation that we should look around and see, what does this mean for the economy there? Is this a new market? Does this mean there could be changes in some X factor that we're not thinking about today? So as always, I would really put that on you to say, think about what happens when these events have happened in the past. So I didn't want to focus all on crypto. I find myself doing it more and more, but that's not really what I want to focus on. I suppose what I'm really saying is that if you have exposure in that space going into this week, there are a number of significant events that you need to be aware of. The death cross, the mining shutdown and expansion in China, the opening up of it in other places to bring it in. And then, of course, as we know, El Salvador did, in fact, I suppose, I'm trying to think of the right word to even describe it, but they did make Bitcoin legal currency. And I know Paraguay, last I heard, was trying to do the same. So on to the next piece of this as well is, we know that we were really working on this Iran deal from a nuclear perspective. Last I understood is negotiations have not been successful and they've failed. This is sort of a good macroeconomic indicator or a geopolitical indicator of the fact that we still have sort of a lot of stress in the global markets. I think this means that there is always an opportunity to be aware that things could go the wrong way, who's involved in this, who stands to lose from it. I don't think that, certainly in my opinion, that we're not going to see continued negotiations, or we're not going to be back at the table having conversations from sort of a global perspective here. But I do think it's important to be aware of the fact that we have a lot going on geopolitically, as we often do. But in this one case, we know negotiations have not been successful. So just something else to keep in the back of your mind here. Some of the other things we're also seeing sort of across the market today as well is, we know that the Federal Reserve has essentially come out and said, there is going to be some hawkishness, right? So this is something that not a lot of people are expecting. So don't be surprised if Asian stocks are going to either be really moving more negative right now into the week until we get a feel for what this means. And I think it's important to keep in mind that when the Fed speaks, we sometimes get knee-jerk reactions, and sometimes they're not really worthwhile to pay attention to. I think in the case of coming out hawkish and talking about potentially raising rates, this is something that you really, really need to understand affects your portfolio and your go-to-market, regardless of the asset class you're in. This was a surprise for a number of reasons, not one of which was that we sort of are still feeling out the COVID recovery, still getting a feel for where the economy really sits, getting people back to work, looking at the joblessness and the benefits that come with that. So that, on top of everything else, was sort of a double whammy, in a sense that it's hard to really get a good feel for what that could mean near term, but also long term. Personally, I don't think I'm that surprised. At some point, we know we have to start thinking about some sort of macroeconomic position within the US, and the Fed is the one who has to take some sort of front on that. Whether you think inflation is going to be wild or not, the reality is we're printing a lot of money. Assets are going to continue to rise in price, and we have to look at how we're going to taper or work in and around this process. So there's a lot of these events going on. The Fed really doubled down on all of this. So don't be surprised if you wake up Monday morning and you're seeing the pre-market down. And also don't be surprised if you're seeing Asian stocks down. I would almost expect it, and then plan for it and plan what you can do in and around that as well. And one thing I would add in, just sort of as a second thought here, is make sure you understand your exposure to Asian markets. I tend to talk about what I'm seeing on Sunday nights all the time, but It's important to understand if you have a Asian stock exposure, company exposure within your index funds, your mutual funds, your ETFs, etc. You may not realize that you have them, or you may not realize that you do have exposure. So just something to keep in mind. A lot of folks don't always know what they're holding and to what level of weighting it might be held within those funds. So just be aware of it and make sure you know what the risk is as you're looking at it. The other big piece, just sort of on this note of sort of continued issues, we know President Biden in the U.S. met with Vladimir Putin. No clear indication of what really came from that. We know we had the Iran talks sort of disintegrate, as I mentioned a moment ago. And then on top of all of that as well, we know from the U.S.-China relations perspective, the U.S. is really pushing for China to really put in some effort on their own soil to look into the COVID origins. This is sort of in a stark 180, in my opinion, from where we were a few months ago, of saying, almost in a sense, leave it alone. It doesn't matter. Now we're getting a little bit stronger from a U.S. perspective, again, in my opinion, and basically going back and saying, look, we want real answers. We need to know what's going to happen. Again, this channel is not about politics. So whether you think one side is right versus the other, it's the wrong place to have that conversation. My concern is if you are a U.S. investor investing in U.S. equities and markets, you are now dealing with continued talks with Iran, Russia, China. We have a hawkish Fed looking to raise rates. We know we're looking at death cross in Bitcoin, which is trillions of dollars, and will, of course, also affect altcoins at scale. So I think if there's anything that you should be really thinking about right now, it's exposure. It's about where you can hedge. It's about where you can protect yourself in the week ahead. I think that mixed within all of the bad news, there's always some good news or some opportunity. But I think it gets very tough to figure out what that opportunity looks like when we're talking very global macro perspective, because it's hard to get a feel for. It can be very difficult, I suppose, to think about where the opportunity lies. And if you choose the wrong direction, it can be a major miss. So with all these events going on, from the technical charting of BTC to the macroeconomic talks and geopolitical issues we're facing, I think that this just in general a good time to understand where your risk lay, if you're over heavy in any specific area, and where you think the opportunity might be. Because it's an important note to make that when markets drop, 10, 15, 20, 25%, it can take a long time to get that back from a returns perspective. So just make sure you understand the length of your holdings, when you need the money that you're holding aside, if you're near to retirement, if you're not, etc. Just be aware of what that looks like. And then finally, I'll just end here, and I'll say, as usual, do your own work, do your own research. When you hear topics like what we're talking about today, take the extra 20 minutes and dig into them and understand what's happened in the past when this has happened. Like, we know that we've had 6 death crosses before in the Bitcoin market. So it's not hard to go back and understand how long the recovery took, how deep it was, how long that cycle was sort of in place. And then the other big piece of this as well is if we see a rotation out of cryptocurrency, which it's possible. I don't know if it's likely, but certainly is possible. If we see a rotation out, what you'll see is a rotation into something else. So as an example, as the Fed came out hawkish and talked about rates raising, we saw the repo rate go up a little bit, and banks transferred billions upon billions of dollars to the Fed for just that little bit of extra interest. And I think that's very indicative of the world we're in today, where we're chasing yield at all costs. And as an investor, you have to ensure that you know what's going on and why that's happening. So as always, thank you very much for listening in. Appreciate it. I know we cover a myriad of topics. A lot of times it can be very big in scale. It can be very specific in a technical perspective. What I would always say is, if you think there's something you'd really like to hear about or get more details on, or just understand at a different level of scale, feel free to let us know. We're happy to dive into the details or keep it more macro based. It's really whatever's going to be useful to those who are listening. So as always, thanks so much. Have a good week. Happy Father's Day to everyone out there. And we'll talk soon. Thanks so much.